At Excel, IGCSE Accounting, Income Statement and Statement of Financial Position for a sole trader business. Let's draw the format of an income statement. We'll need 2 columns for the income statement amount and 1 column for description. As per the question that we are going to work on today, this would be the respective lines that you need to leave. Once you're done with giving the subheadings, we can start with completing the question. The first additional information for this question is closing inventory, which was valued at 9,345. So Tan, the sole trader, provided the following information at 31st December 2023. And these are set of information which we are going to use while completing the adjustments. Closing inventory 9,345 should be transferred to income statement under cost of sales, whereas statement of financial position under the category of current assets. Now let's see how this reflects in the income statement. Goes under cost of sales, and the last element is less closing inventory, less 9,345. Now let's show the impact in statement of financial position. This goes under the category of current assets, and the first element is closing inventory. You write this in the second amount column. Insurance 600 was paid in advance. Remember, any advance payment for expenses or income should be deducted. As you can see here, you have an opening balance of insurance 3,600, and during the year end, 600 was paid in advance. You deduct that and transfer 3,000 to the income statement expense, whereas the 600 should be transferred under statement of financial position under other receivables, as it's an advance payment for expense. Now let's see how this reflects in the income statement. It goes under expenses, insurance, show the working within brackets 3,600 minus 600, and the end value should be 3,000. Whereas in the statement of financial position, you write this under current assets as other receivables 600 in the second amount column. On 31st December 2023, business rates 570 were owing. So any amount owing for expense and income should be added with the balance given at the beginning of the financial year. Business rates, you have an opening balance of 1,430 and the amount owing is 570. Add up these two together to transfer to income statement expenses. 570 goes to SFP and other payables, whereas the 2,000 to income statement under expenses. So let's see how this reflects in an income statement. Business rates, opening balance 1,430 plus 572,000. Write this in the first amount column. Whereas in the statement of financial position, it goes under the category of current liabilities as other payables, because this is an expense which is accrued. During the year, Tank took goods costing 3,290 for his personal use. So he added drawings under SFP and credit purchases, but this should reflect under income statement cost of sales. As you can see here, under the section of cost of sales in income statement, you write it as less goods taken for personal use 3,290. Whereas in a statement of financial position, this goes under the category of equity, less drawings. If there is any opening balance during the financial year, you add up that and write the final amount in the second amount column. The purchase of a new motor vehicle 15,000 had been included in the motor expense account. So it's an error. So you add to motor vehicle and less from motor expenses. So let's see how this reflects in an income statement. Those under expenses, motor expenses opening balance 22,890, deduct 15,000 which should give 7,890. Whereas in the statement of financial position, motor vehicle 35,000 opening balance plus 15,000 should be 50,000 in the first amount column. Depreciation on non-current asset is to be provided as follows. Fixtures and fittings 10% per annum using straight line method. So as you can see, the opening balance of fixtures and fittings 10,000. Find 10% of it, which should give 1,000. This is the amount that should be transferred to income statement for the current year under expenses. Whereas motor vehicle 25% using reducing line method. Therefore, you take the cost minus the accumulated depreciation. There should be a minus over here. Find the net book value, and the percentage should be 25%. So 50,000 is the closing balance of motor vehicle. Current year, the previous depreciation amount is 5,000. Therefore, the net book value should be 45,000 into 25% to find the current year's depreciation for motor vehicle, which is 11,250. This should be transferred to the income statement under expenses. Now it's time to find the accumulated depreciation. The opening depreciation is 2,000 for fixtures and fittings, and the closing balance 1,000. The total 3,000 should be transferred to the statement of financial position. Whereas for motor vehicle, the opening balance of depreciation is 5,000. Current year's depreciation for motor vehicle 11,250. Therefore, the total or the accumulated depreciation should be 16,250, which needs to be transferred to statement of financial position. Now let's see how this reflects in an income statement. As you can see here, show clear workings for the depreciation of fixtures and fittings and motor vehicle, and transfer the amount in the first amount column. Fixtures and fittings depreciation 1,000, motor vehicle depreciation 11,250 in the income statement. Whereas in the statement of financial position, you take the accumulated depreciation, the total depreciation for motor vehicle 16,250, you less this in the second amount column. For fixtures and fittings 3,000 depreciation should be deducted over here from the cost of fixtures and fittings. Now we are done with all the adjustments. Now it's time to post entries of the remaining information in the table given. So let's complete the statement of financial position. As you can see here, premises at cost 85,000. Transfer the amount in the amount column, the first amount column. And then in your income statement, let's complete the incomplete information. Revenue worth 150,000 in the second amount column. Opening inventory 8,700. Purchases 89,000. Return outwards or purchases returns 4,256. And carriage inwards 800. Now let's find the cost of sales, which should be 81,609. Now you find out your gross profit. From your net revenue, deduct cost of sales in order to get to gross profit, which is 68,391. Now let's complete the second half of the income statement and fill in the missing information. Business rates, we are done. Now it's carried outwards 1,300 over here. General expenses 5,800. Irrecoverable debt 650. Now let's total up all the expenses, which gives a total of 32,890. Deduct that from the gross profit in order to find the profit for the year, which should be 35,501. We are done with statement of financial position, the first half of the statement of financial position and the second half of the statement of financial position. We have some missing figures in the statement of financial position. The reason being that the question is to complete income statement. However, I've shown you how the entries work in income statement as well as in statement of financial position. Now, transfer the profit for the year from income statement to statement of financial position under the category of equity. Now, we are done with completing an income statement and a statement of financial position. And this was a question which was tested on June 2024, paper 4AC1/02R.